April 17, 2016, when a leak the size of a digital tsunami burst onto the world's screens. 11. 5 million confidential files exposed a hidden universe where the world's richest families, politicians, and crime syndicates hoarded trillions of dollars in offshore shell companies. The revelation was not just a scandal. It was a forensic excavation of a shadow economy that had thrived in the darkness for decades. The story began in the quiet corridors of a small Panamanian law firm, Moss & Co., founded in 1977 by Jurgen Moss and his partner Ramon Moss. For more than 3 decades, the firm specialized in creating anonymous corporations, known as international business companies or offshores, that could be registered in tax havens such as the British Virgin Islands, the Cayman Islands, and Panama itself. These entities required no disclosure of beneficial owners, allowing anyone with enough money to hide assets, evade taxes, and launder proceeds from illicit activities. In 2015, an anonymous source, later identified as the enigmatic John Doe, approached the German newspaper Süddeutsche Zeitung with a promise: the complete database of Moss & Co., comprising more than 6 terabytes of files, emails, invoices, and client lists. Recognizing the magnitude of the find, Süddeutsche Zeitung passed the data to the International Consortium of Investigative Journalists, ISIJ, a network of more than 400 reporters spanning 100 countries. Over the next 12 months, journalists sifted through 6 million PDFs, 4,000 emails, and 28,000 documents to map out a web of shell companies that linked heads of state, Hollywood celebrities, and multinational corporations to secret accounts. The key facts that emerged were staggering. More than 214,000 offshore entities were linked to the Moss & Co. files. Among them were companies owned by the then Prime Minister of Iceland, Sigmundur Davíð Gunnlaugsson, whose hidden holdings in an offshore trust sparked massive protests and forced his resignation. In Russia, the name of President Vladimir Putin appeared in the files, not as a direct owner but as a beneficiary of a network of companies allegedly controlled by close associates and family members. In the United Kingdom, the files revealed that Queen Elizabeth II private estate, the Duchy of Lancaster, owned offshore entities that held assets in the Cayman Islands, raising questions about the monarchy's financial opacity. The Panama Papers also unmasked the mechanisms that enable tax avoidance. By establishing a shell company in a jurisdiction with zero or low corporate tax, a wealthy individual could funnel profits through a series of interlocking entities, erasing paper trails and reducing taxable income to near zero. The leak exposed how law firms, accountants, and banks, among them PwC, KPMG, and HSBC, facilitated these structures, often charging millions for the creation and maintenance of each shell. When the leak went public, governments around the globe launched investigations. In the United States, the Department of Justice opened a criminal probe into potential violations of the Foreign Corrupt Practices Act. In Germany, prosecutors pursued a case against a former finance minister for suspected money laundering. In the United Kingdom, the National Crime Agency seized assets linked to offshore companies implicated in the leak. Meanwhile, the International Monetary Fund and the Organization for Economic Cooperation and Development, OECD, intensified calls for a global transparency regime, urging nations to adopt public registries of beneficial ownership. The legal battle that followed centered on Moss & Co.'s founder, Eugen Moss, who was arrested in Panama in February 2017 at the request of the United States. Charged with facilitating money laundering and tax evasion on a massive scale, Moss faced a web of extradition requests. In 2019, a Panamanian court denied his extradition to the United States, citing concerns over his health and the fairness of a trial that would occur under U.S. jurisdiction. Instead, Moss was sentenced to 10 years in a Panamanian prison for forging documents and tax fraud, a verdict that underscored the complexity of prosecuting offshore crimes that cross multiple legal systems. The verdicts extended beyond individual prosecutions. In Iceland, a parliamentary investigation led to a comprehensive overhaul of the country's financial regulatory framework, tightening disclosure requirements for offshore holdings. In Brazil, the leak fed into the massive Operation Car Wash corruption scandal, resulting in the imprisonment of former President Luiz Inácio Lula da Silva for bribery charges linked to offshore accounts. In the United Kingdom, the government announced the creation of a public register for overseas entities, a first step toward dismantling the veil of secrecy that had protected illicit wealth for generations. The aftermath of the Panama Papers reverberated across the financial world. Asset management firms reported a surge in client inquiries about the legality of their offshore holdings, prompting many to voluntarily close dubious structures. The European Union introduced the fifth anti-money laundering directive, mandating member states to collect and share beneficial ownership data. Meanwhile, the public's appetite for transparency grew, fueling the rise of investigative platforms such as the Offshore Leaks database and the subsequent Paradise Papers in 2017, which exposed an even broader network of tax shelters. Yet, the fight against offshore secrecy is far from over. New leaks continue to surface, each revealing that the architecture of financial opacity adapts faster than legislation can keep pace. Critics argue that while high-profile prosecutions send a symbolic message, the majority of hidden wealth remains insulated behind complex legal entities and jurisdictions that refuse cooperation. The Panama Papers ignited a global conversation about fairness, accountability, and the moral cost of a system that allows a handful of individuals to shield massive fortunes from public scrutiny. Subscribe to The Verdict for more stories like this.